Go do that. If he easy.
All right, good morning. I want to believe you can hear me. So please, if you can hear me clearly, just send in a yes. If my audio is clear, please send a yes. All right, thank you very much. All right, so that's good. Okay. All right, thank you. So I think we can start. All right, so my name is Don Gayo, be your host for today. To start off our analysis by looking at the fundamentals. So let's start off by going to the forest factory, and then we'll see what we have in store for today. So I'm already seeing somebody asking questions in the comments. This guy should allow us to start. Allow us to start, then later you can ask your question. We've not even done anything, you're sending in question. We will address your question, but allow us to do our analysis first. All right, so quickly, let me share my screen so that you can see what I'm looking at. Okay. So I am using Forest Factory from the calendar, and I want to believe you can see my screen. All right. Okay. So today being the 14th of August 2024, Wednesday, we have the CPI, United States dollar, scheduled for today. So we have the CPI and the core CPI alongside with the inflation reading rate. So these news are very high impact news that we're taking it. This news is going to be around 1:30 the afternoon, 1:30 p.m. Earlier this morning, we had a news on NZD. But interest rates, and as expected. Now, why do I say as expected? Over here on Monday, we did an analysis, fundamental analysis class on Monday. And for those that are in Port Harcourt, I attended the class on Monday. It was clearly stated that we should expect lower numbers on the interest rates. So based on what we've been seeing from NZD, it was clear that they were going to cut rates. So a sell on the NZD was stated since on Monday. I don't know if there are any persons in PH that attended my class this week Monday. If you're here, please just let me know. So the number came out as expected, negative. And you can see the effect it had in the markets. There were some reasons why we were able to forecast that this number would most likely be negative. Because we've been following up the data that has been coming out on the New Zealand, and it was very clear. All right, so another thing, besides that, we also have the CPI on the British pound. CPI on the British pound today turned out to be negative. Now, the number is 2.2 against 0.3 that was forecast. Now, with this kind of number, remember, when news events drop like this, the initial reaction of the market is based on traders comparing the actual with the forecast. So when the actual is compared with the forecast, if the actual is less than the forecast, market will react. So you see the initial reaction, that first move that occurs in the market is based on the fact that the actual has been compared with the forecast. But after that reaction, the next reaction that you see is when the actual is now compared with the previous. So on the CPI for the British pound, you look at the previous, you notice that the actual today is less than the previous. Yes, so that tells you that inflation is still high. That is what is simply. So irrespective of the fact that it's less than the forecast, look at the previous and the actual, you will notice that the actual is still higher than the previous. What that tells you is that CPI increased. Remember, this previous is the data from last month. So this is still letting you know that on the British pound, the CPI is high. So that initial movement that you noticed today on the British pound depreciated because actual has been compared with the forecast, and the actual turned out to be less than the forecast. The reaction is appropriate. But now, after this initial reaction, what next? You will see that by the course of today, the British pound will come back. Yes, I will explain that we progress. You will notice that the British pound will come back because the actual is higher than previous. I don't know if I'm trying to, so if you understand what I have just explained, just type a yes and let me know that you understand. I'm saying that for the British pound, the actual today was less than the forecast. If you understand what I've explained, I just say type a yes. Okay, that's good. A couple of persons are understanding what I'm saying. Very good, very good. All right. So the initial drop in the CPI for the British pound is appropriate because the actual is less than forecast. But you will notice something, that drop is not going to last. We are going to go back up. And we will go back up because the actual is greater than the previous, which means instead of CPI reducing, CPI has increased when compared with the previous month. And that is a positive signal for the pound. So we should expect a comeback pound. So it's normal. So the next news we have is on the US dollar, which is the CPI. Now, for those of us that followed the news yesterday, you notice how the PPI reacted. There was a negative PPI for the for the British, for the US dollar yesterday. Now, this PPI is very, very important because it tells us the inflation at the wholesale level. So PPI lets us know the inflation at wholesale level, how investors, how manufacturers are viewing. Remember that for the essence of all of this information, interest rates increase or cut. In the era we are now, either interest rate cut or hold. So the central banks are yet to decide whether the interest rate should be cut, current price, or current base point, or it should be held. Now, analysts are suggesting that with the data that has come out so far, the Fed, I want to believe you know what I mean by the Fed. Analysts are suggesting that the Fed should cut rates by 50 basis points. That is going to require 2 times, which means they are going to cut twice. 50 basis points. So normally they're cut by 25. So it's expected that it's going to be twice. But today's CPI will determine whether it's going to be twice. So if today's CPI turns out negative, then that interest rate cut will be twice this year, going to be 50 basis points. But if the CPI today turns out to be positive, then interest rate will be cut once. So it is not even about whether the CPI is negative or positive. Whether it's negative or positive, interest rate will be cut. Take note of what I'm saying, that whether the CPI today turns out negative or positive, interest rate cut, they will cut rates. But the most important thing now is how many times will they cut rates? If it is negative, then there's a possibility they'll cut twice. Yeah. And if it is positive, they might most likely cut once. So in all, from the data so far, and also from PPI, remember, when we now look at CPI, we are looking at the changes in price at the consumer level. You know, how consumers are spending, or how the prices of commodities, basic commodities, are being affected at the consumer level. On the producers level, we have seen that inflation is actually dropping. On the consumer level, it's dropping. So which means there's a high tendency, now listen carefully, there's a high tendency for today's CPI to be negative. So in my own personal analysis, I expect today's CPI to be negative. And if today's CPI is negative, then I should see further decline in US dollar. So I am expecting, or I want to sell dollar today. So my analysis is that currencies with the dollar as the base, I will sell. Currencies with the dollar as the quote, buy. So I am forecasting that today's CPI will most likely be negative, looking at all the data available to us. But take note, I said, even if the turns out to be positive, the rate will still be cut. The only difference will be the number of times it will happen. So what that simply means is that the odds are against the dollar. The odds are against the dollar, whether it is positive or negative. So if it's positive, you might see an initial push to the upside for the dollar, but that movement may not last too long because it's already on the table that they are meant to cut interest rates. Else, US economy goes into a recession, and the Fed will not want the economy to go into a recession. So with that, even if today's CPI turns out positive, they will likely still cut rates, but they may only do that once. All right, so that is it on the fundamental front. So for those of us that have questions on anything that I have said, so I want to see your questions before we now go into the technical analysis. Let me quickly go through the questions that you have on what I have said. So initially, I asked if you understand what I have said. You send a yes, and a couple of persons send a yes. And I think I'm seeing somebody's comment that says, okay, I'm seeing very clear. Someone is asking, what effect does it have on the market? So, what effect does what have on the market? Please, I want us to be done with the fundamentals before we go to the technical analysis. So please expatiate on what you mean by effect of what? All right, so someone is saying he doesn't understand. All right. So in summary, what I said is that when news drop, I was referring to the British pound. So please permit me to go over this for the sake of the gentleman that did not fully understand. I said when the news drop, so listen carefully now. This will help you even in your other analysis. When the news drop, first reaction that you experience in the market, because traders, when I mean traders, I don't mean you and I mean the bigger traders. First reaction you observe in the market is because they have compared the actual, the past. So when the news drop, first move that is experienced is a comparison of the actual and focus. But now, after that initial movement on the market, the next comparison would be the actual and the previous. So in the case of the British pound, we notice that for today, the news on the British pound, that is turned out to be negative, 2.2%, which means it is less than what was forecast. Forecast was 2.3, the actual turns out to be 2.2. So which means it's less than the forecast. That is why you notice or you saw the sharp drop, British pound, cross board. All currencies that had the pound with it in the pair saw this drop. Now, the twist to the whole issue is that this drop that you have seen will not last because the actual is actually greater than the previous. Now, the actual is 2.2 and the previous is 2.0, which means inflation increased this month when compared with the previous month. So with that being said, this increase is a hidden strength in the pound, which most persons will not know. Yes, most persons will only be looking at the fact that it's negative and then the pound is selling. No, it's not going to sell. There is still strength in the British pound because the actual is greater than the previous. Remember that when we talk about inflation rate, the inflation rate and also CPI needs to be higher for it to be good for the currency. If it's higher, just like CPI, now if the CPI is increased or is increasing, it means that the central banks will find it difficult to cut interest rates. Also take note that the market revolves around interest rates. So the reason market is moving up and down because interest rates are either increased or decreased. So if the number is high, that is CPI, then it's always good for traders, but not good for investors. Investors want the CPI to be reduced, but traders want the CPI to be high. So if the CPI is high, then you should expect that the central bank will find it very difficult to cut interest rates. They might want to hold and wait much longer until CPI drops. And in the analysis, they compare the current CPI to the previous month. That is what they look at. They look at the current CPI and the previous month. So I am saying that the initial reaction you see in the market at the time of the release of the news is traders comparing the actual to the forecast. But the long-term effect that news has on the market will not be comparison of the actual to the previous. So I want to believe that what I have just said, for those that don't fully get. So please, quickly, let me rush through the questions on the fundamentals so that we can go to the technicals. So this guy is asking, does CPI have relationship with unemployment rate and NFP? Yes, CPI has a strong correlation between, there's a strong correlation between CPI, unemployment rate, and NFP. Now let me explain. CPI tracks the rates at which consumers are spending. So which means it's a measure, it's something that is used to measure the inflation rate in a particular economy. If we want to measure inflation rate or if you want to calculate inflation rate in a particular economy, we will now look at the rate at which the price of consumables, goods that are consumed by consumers. Consumers are you and I, households, those who buy retail, those who buy at the retail level. So if you are buying anything at the retail level, you are a consumer. So the rate at which the price of these commodities are changing, what is called the CPI, is an index. that is tracking the change in price of his basket of commodity. Now, the PPI, on the other hand, is looking at how the producers are spending. For instance, in the inflation, there are two things that can cause inflation. Inflation can be caused by those buying. If people are buying more, there's a tendency for inflation to. On the other hand, if producers are producing at a high cost, then inflation would also increase. But if producers produce at a high cost, they will most likely increase the price of their commodity. Then the consumers will have no option but to buy at a high price. So that is why the PPI and the CPI is used to measure inflation. The PPI is on the consumers, on the producers level, and the CPI is on the consumers level. Now, how does CPI relate to unemployment and NFP? If people are unemployed, if more persons are unemployed in a community or in a country, there's a tendency that the spending rate will be reduced. So if you have a high rate of unemployment, there's a high tendency that less persons will be willing to spend more. Most persons will want to just save. And if less persons are spending, there's a tendency that CPI will be reduced. So that is one of the reasons why you notice that before the CPI, there's usually employment data. So employment data will have to come out first before CPI. So from the employment data, you can easily forecast what the CPI will look like. So if you have a country that has high rate of unemployment, and then you also notice that month over month, say for instance, like for 2 months consecutively, the average hourly earning is dropping. Average hourly earning is how much people earn per hour. If you notice that the average hourly earning is dropping and the unemployment rate is increasing, then there's a likelihood that CPI will reduce, because people will not be able to spend more or spend as much as they would have loved to. But if unemployment rate is dropping, that is, unemployment rate is reducing, and then average hourly earning is increasing, then it means that there's a tendency for CPI to increase, because it means people will most likely want to spend more. They will most likely want to buy more. And if that is happening, then you should expect that CPI increase. Now, how does this relate with NFP? NFP is also a data that is used to measure the labor market. Now, NFP simply means number of people that are employed outside the farming industry. So we are now looking at the number of people that are gainfully employed outside the farm. So which means if this group of persons, if the number drops, if NFP drops, then there's a likelihood that unemployment rate would also increase. If unemployment rate increase, then there's a likelihood that CPI will reduce. So I don't know if what I have explained is clear. Now, some of these things can be deep, but I'm just trying to make it simple so we can easily do it. Yesterday, CPI was negative. USD. Gold was. No, there was no CPI yesterday on the USD. All we had on USD yesterday was. With the news on NZD, we expect further weakness in the currency. Yes. So with the news on NZD, expect further weakness. Now, the reasons why, like yesterday, being on Monday, those that attended my class in Port Harcourt, they already knew that NZD was going to drop because of today's news. Why? I've been following up the data, and I gave them the heads up that look, NZD will reduce, the interest rate will be cut, and there were indications that pointed out clearly that today's news was going to go as it went. The reason is because the last meeting that was held by the central bank, that is for the NZD. So I'm responding to the question by Michael Aman. The last news that was heard on the decision to increase rates, the New Zealand did not increase their interest rates. So the statement was what was important. It was said in their last meeting that the country has gone into a recession. So there's already a recession in New Zealand because of the fact that the interest rate has been kept elevated for a long period of time. So with that being said, analysts were expecting that the meeting in July should have warranted the cut in the interest rate, but they did not. That was why even in that July, if you go back to check July, when the news came out, when the interest rate reading came out on NZD, there was no cut. It was not less than focus, but NZD dropped. So you notice that NZD dropped. So if you go back to July and check the date, the interest rate was released. The interest rate was not cut. The number was still high, but NZD dropped. The reason was because investors were expecting them to reduce the rates because the country has already gone into a recession. So with this current cut now, there's a tendency for this to continue dropping because with the recession they have gone into, analysts are suggesting that they will need to cut 4 times. So you can imagine the number of times. So they are expecting that the New Zealand, the ROB-NZ, will cut interest rate on the New Zealand dollar 4 times, 4 good times. So you should expect further weakness in NZD. So this we have, I'm explaining is on the fundamental level. So how is it best to trade news release? Very clear. All right. So who is this Felix? So let me please. What's the difference between relationship? All right. So someone is asking the relationship between actual, focus, and previous. Now, some of these things you can find out yourself, but the actual means the number, the actual reading of the data. Focus simply means what analysts are focusing. For instance, in Canada, they have the Bureau of Statistics Canada. They are the ones that are responsible for bringing out this data. So, but before they bring out the data, there are analysts with several banks that will collate or do their own analysis, collate data themselves, and then come out with a figure. So the focus is the data that has been collected by analysts from several major banks. And then the aggregate of their focus is what is shown to us at focus. So the focus is what analysts globally expect the actual to be. Then the previous is the value from the previous month. I hope that is clear. Technical is expecting more about. Thank you so much for. All right, awesome explanation. Okay, yes, thank you. Okay. So someone is asking, was that the reason why my pending order was shifted to my take profit? Now, listen, guys. Depending on the volatility of the news, when there is a news release and you set a pending order, there's a tendency for your pending order to be filled at a later price. Take note of that. Very, very possible, depending on the volatility that is experienced in the markets. Now, this thing I'm explaining to you happens with all brokers, not just one particular broker. So because of the volatility, you can be filled at a later price other than the price you have specified. So, but if you go in with an instant execution, you will not experience that. The only challenge you might experience when you use an instant execution is off-quote. Also, the volume of order that is coming into the market. You might experience off-quote, but if you keep trying, one of your entries will go. So if you enter instant execution, you will not experience this. But if it's depending on the volatility of the news, not all news will do that. And even a specific type of news may not do that all the time. But depending on the interest in that news and what's actually happening, possible your pending order can be shifted. Very, very, it happens all over, not just a. So I want to believe that answers your question. So whenever this happens, it's usually referred to as slippage when you are filled at a price other than the price you bargained for. So that is clear. I hope that is clear. All right. So I think I've taken all the questions on the fundamental analysis. There are so much, but we cannot go through all of them. So right now, let's now go into the technical analysis. So in the technical analysis, we will start off by looking at the dollar index. So permit me to share my screen so that we can quickly look at the dollar index. Now, the dollar index is what gives us the direction as to what we expect to happen on the United States dollar. And then afterward, we will now look at other currency pairs or other instruments that is paired with the dollar. Right, so I have it at the back of your mind that I do more fundamental analysis than technical analysis. So my analysis mostly is on fundamentals. And in my opinion, I I can take trades easily, technically, once I understand the fundamentals. The reason is simple. Fundamentals are the life behind the market. So if the market is moving or the market will move, because of the fundamentals. Now, please permit me to pull up my EXY chart. So when I talk about fundamentals, I'm not referring to just the numbers dropping. I mean understanding the numbers. As the numbers are dropping, the ability to understand economically how it affects the nation currency you are trading. 2 minutes for me for dollar index. Dollar index. All right, so okay, so this is the dollar index. Now, as you can see clearly, from yesterday, we had the massive drop based on the PPI. Now, if I switch to one, this is the daily time frame. Now, for those that had followed up my analysis in the past, if you were with me some weeks ago, so most times my analysis, I'm featured on this program on Wednesdays. Most of the Wednesdays, in fact, virtually all the Wednesdays, you would likely hear my voice. I have mentioned it earlier in the previous analysis we have done that the dollar index was going to run below this low. Remember, this was the low in June. So this was the low price that we saw in June. And then I made it severally that we are going to run down. So with what we are seeing so far, we would most likely continue down all the way to our region. At this region, I am marking in green rather. So we'll most likely continue all the way down here. So for us to have a retracement, I will want to see the market drop down all the way to down around this area. So once we drop down to this area, then we might likely see a retracement. Now, the CPI today has the tendency to push us all the way down to that region. Any retracement we might experience would be after we get all the way down to that place. So I'm still expecting the dollar to continue its move to the downside. So take note that this movement down is a downtrend, but there's a reason behind the downtrend. The market is not going down because there's a support down here. Take note of that. The market is not going down to this support down here. The market is going down because of the fundamentals. The data has been coming out so far has been pointing to the fact that if the Feds are not careful, the United States will go into a recession. In fact, some quarters are even saying that they have spent too much time holding the interest rates. Some persons are even suggesting, some analysts are saying that more measures will need to be taken besides just cutting rates in order to prevent the economy from going into a recession. So the rate cut might not be enough. Other measures will need to be taken for the country not to go into a recession. But the rate has been held elevated for too long. Now, one question is, how come an elevated interest rate causes the nation to go into a recession? The reason is because businesses, companies, and organizations cannot function very well when the interest rate is too high. Businesses would want to or prefer a lower interest rate. Why? Because for the economy to expand, for businesses to prosper, for businesses to expand, sometimes they need loans back. And these loans are collected with interest. So it means that if the interest rate is high, the access to this money becomes expensive. So companies in industries and whatever may not be able to expand as much as they want, or even increase production as much as they would, because it costs them more to take loan from the bank. So, but at a lower interest rate, companies can take loan. You know very well that even governments themselves take loan from the bank to finance certain projects. So the government can take loan to finance projects. Companies take loan to expand their business, and all of that. That is one of the reasons why if interest rate is left high, the economy begins to shrink. And if the economy shrinks, means that companies they are not really producing as much as they, or they are not expanding as much as they. But with that being said, not too good for the interest rate to be left high long. So the movement of the dollar index to the downside has been forecast since, since June, when we're following up the fundamentals. You could see clearly that the dollar would yes, technical analysis based on patterns display these fundamental events. Because of these fundamentals coming out, causes the market to display certain patterns that are repetitive by nature. These patterns are what we call the technicals. So that is where your technical analysis comes in. But what creates the pattern? Okay, please, can you hear me now? Please confirm if my volume is okay. I'm having issues with the network. My network is, it just suddenly went off and it has been finding it's been hard to come back on. So please confirm if my network is okay. All right, all right, all right. Thank you so much. Thank you so much. Sorry for the break in transmission. No fault of mine. Sometimes this is our network over here. Okay, so where were we? So quickly, let me go back to our analysis. So we were on the dollar index, and I clearly stated that we expect further decline in the United States dollar. That is due to the fact that today's CPI, now take note that the analysis I am giving you is based on the data I have considered so far. Yes, I might be wrong, but take it at the back of your mind that there's a high tendency for today's CPI to be negative. So if the CPI turns out negative, then we should see further decline in the United States dollar. At this particular moment where the dollar is positioned, a lot of persons be tempted to want to sell, you want to buy. There's a high tendency to feel that the dollar might retrace. But until we have opened the low, I mentioned earlier. So once we get down to that particular region, which I shaded down here, then I would be expecting a retracement in the dollar. But for now, at the time being, I'm expecting a further decline in the United States dollar. Now, also remember I said that the matter on the table right now is not really about the CPI being negative or positive. CPI can be positive, but the difference is the number of times the cuts. And I've mentioned earlier that the analysts are suggesting that there's going to be 50 basis points cut on the dollar. And that will largely depend on today's CPI. If today's CPI is positive, then we might see just one rate cut in the United States dollar. If today's CPI is negative, then there's a tendency it might be cut twice. If today's CPI is negative, what you will see, massive selling, a massive drop in the dollar, very massive drop. If it's positive, you will see increase in the dollar, but the increase might not be so much. So whichever way the CPI goes, it's still bad for the dollar. That is what I'm letting you understand. So whether it turns out to be positive or negative, it's going to be bad for the dollar, mentally speaking. So, but at the initial time, you will see a movement to the upside if the news is positive for the dollar, but it may not be as much as you would expect on the CPI day. And the reason is because if it is positive today, the interest rate will still be cut. But if it's negative, then you see massive sell on the dollar, massive drop. From my analysis, I'm expecting that selling to continue, what we see currently to continue. And so also have at the back of your mind that from now to the time when the news is, we might not see so much activity in the markets. Yes, of course. So it can also happen on the CPI. So always have that at the back of your mind. There's nothing manipulation about that. I'm responding to a question asked by Felix. There's nothing, it can happen to anybody who's across board, not just with us, with every other. That is what happens during news time. But not all news, not all, and not all the time. It depends on the volatility that experience in the market. Depends on the volatility. But sometimes, let me tell you something for a fact. I personally, when I'm trading news, I am in the news. I am in the trade before the news. So before the news drops, I'm already in that particular trade. So if like for this CPI, I will already be in my trade, like 30 minutes, 20 minutes before the news drops. I'm already in. If they buy, I'm already buying. If it's a sell, I'm already selling. Yes, that is because I know that things like this can happen. You may be filled at the wrong price. That's not it's not a hidden truth. It's not something that is hidden. It's something that everybody knows. Everybody who trades the market knows that conditions like that can happen. Things like that can happen. So please don't be alarmed when you see something like that. Completely normal for it to happen sometimes. It happens sometimes, but not all the time. So take note of that. Please give me a few minutes. All right. So now let's now go to Euro USD. So having done some analysis on the dollar index, so there's not much to say on the dollar index. What I'm expecting is a continuous decline on the dollar. Now, this might not. Now, if you look closely, if you look at it closely, technically speaking, you look at the dollar index, there's a tendency for a retracement. So technically speaking, on the dollar index, it shows us that there's a possibility of a retracement. So what I mean is this: I would have been much more comfortable if the dollar has retraced this morning to around this region before dropping. So my opinion, I was hoping that the news on the British pound will cause the dollar to retrace. remember that that news on the British pound was negative. So, and I was hoping that the dollar would retrace and then give us something that looked like this. So if you can see my screen, you see what I'm drawing on the screen. So I use a Fibonacci to get the level of my 61.8. And so this is what I was expecting actually. I was expecting that today, the news on the British pound will cause the dollar to appreciate a little bit. That is giving us a mild retracement. And then the news on the CPI on the dollar will push it all the way down. But we did not see so much retracement on the dollar, even though the news on the British pound was negative. Remember, I said that negativity is inherent strength in the pound because the actual is higher than the previous, not just the focus. So that is why we did not really see a pullback on the dollar index. Technically speaking, the dollar is ready for a mild pullback. Fundamentally speaking, should expect a pullback downside. Let's look at so one of the currencies I traded yesterday was AUD/USD on the PPI, and it gave a very nice profit. I traded AUD/USD and pound card, and then US pound/USD. So, but let's start off with our Euro/US dollar. So this is Euro/USD, and then let's look at what we have in store for Euro/USD. So for Euro/USD, we can see yesterday's movement to the upside by the PPI. And then today we are also seeing this move to the upside. So like I mentioned earlier, I would have loved to see a decline, a retracement, and then a continuation higher. Now, if you look at Euro/USD on the higher time frame, notice that there's this high market has just exceeded. But right now, our next target will be for the market to run above that high. So I don't know if you can see I want to believe you can see this line I have just drawn on the chart. So there's a high tendency for us to run up to that high. Now that high turns out to be the high in December 2023. There's a possibility that maybe before we run out of funds, I get to that high. So, but Euro/USD has overextended itself. But most of the indicators right now will show you that Euro/USD is at an overbought level. It has gotten to an overbought level, and there's a tendency, technically speaking, for retracement. Now, I would have preferred to see a retracement on Euro/USD before the time of the news. I would have loved to see something of this nature. I would have loved to see something of this nature on Euro/USD then before we higher. But unfortunately, we do not have major news before the time of the CPI. So there's a possibility that we might not retrace as expected. We might just continue higher. That is if the news is negative. If the news on the dollar is negative, then we might just continue higher. But if the news on the dollar is positive, we might retrace, continue higher. Have that at the back of your mind. If the news is positive, we might retrace, we might fall down, but we will continue higher. So for now, on Euro/USD, I'm very bullish on Euro/USD. The only thing I'll be waiting for is a good entry point. And where we are currently is not a good entry point. I am usually very much uncomfortable taking trades when we are at a high like this. So the place I would rather want to position myself one entry somewhere around here. So if the market can come back to around this area, then I will be much more comfortable. Now, but because of the nature of the news we are expecting, we might also expect the market to retrace back up to this level. So this level I am drawing, so you can see this green line on my chart now. This level is yesterday's high price. So that is yesterday's high price. So I would have loved to see the market retrace all the way up to, or retrace down to this level before I buy. But the best place for me, or a much comfortable area, would be down here. So if we can come into this range, if we can come back into this range, I'll be much comfortable buying from within range. Where we are currently is not favorable for me. If we see the market come back to this range, in and buy at that point. So on Euro USD, I'm super bullish on Euro USD. And even if today's news turns out to be positive, then we would see a drop in Euro USD. I'm still very bullish on it because I know that that drop will not last. Market will still continue higher because interest rate on the dollar will still be used. Then on the pound USD, so currently one of the stronger currencies that we have fundamentally speaking, the British pound. So the British pound turns out to be one of the, yes. So the British pound is red. So look at what we have on the British pound. Look at what we have on the British pound, guys. So between Euro USD and the British pound is the best to trade because the retracement I am expecting has occurred. You can see the retracement. So this is a much better place for me to take a buy rather than the Euro USD that we saw that is almost at the peak. So this kind of retracement is appropriate. So we want to see this kind of retracement before we even consider buying. So right now we have retraced. Remember I said this drop here was because the CPI was less than the forecast. But because the actual is still greater than the previous, this move down will not last. The pound will still go back up. So with that in mind, that is even adding to the fact that there's a tendency for the dollar to continue lower. And then for today's news, instead of Euro USD, I'll be much more comfortable buying all right, apologies once again. My network went off and came back. So I'm having serious network issue right here. So please, sorry about that. All right. So sorry about the break in transmission. My network went back and then, okay, so something is already happening on the British pound. So let me share my screen so that you can see what is happening. So this is exactly what I'm looking for. So please follow up the news, follow up what I'm showing you now on my chat. So this is exactly what I'm looking for on the British pound. Like I said, I would want to see it retrace back down to this region. So you can see it clearly that we are going back down to this area. So I want to see it stay around this area. Look at this green line has fallen. I want it to be here before CPI. So if it can fall and stay down here till the time of the CPI, that would be a perfect entry. Or if it falls all the way down, even beyond this before CPI, that would be a very good entry. So I'm expecting it to, get down to that point. So let me quickly check something now. Now, please take note that for today we also have a GDP growth on the euro. So to have that at the back of your mind, that there's a high impact news on the euro. Please, for those of us that are here, remember we looked at Euro USD, and I said I would be much more comfortable if the price on Euro USD drops. So I want to see Euro USD drop, or we continue higher. Now, please permit me to share something with you. So let me end this, and then I will share something else with you so that you can get a view of what I'm looking at. So look at this black calendar, at this particular calendar. It's a news calendar also, just like Forex Factory. Notice that today is Wednesday, August 14th. Now, if you look closely down here, you can see that there are news on the euro. Please, if you can see what I'm showing you, just indicate by typing a yes. See what I'm showing you, indicate by typing a yes. So there are news on the euro. You can see that we have high impact news on the euro. Yes. So this high impact news on the euro, I'm expecting it to push the euro dollar down. I'm expecting euro dollar to come down before the CPI for the dollar. Now the CPI for the dollar, so if you see, all right, thank you so much. So good that you can see what I'm showing you. So this is one of the reasons why, if you're trading fundamentals, you want to also consult other calendars. So this particular calendar is my FS book. So you can see that this news on the euro is not in Forex Factory. So that news on the euro, you won't find it on Forex Factory. But you can see that there's a high impact news on euro, and there are other calendars that if you look at, see that there are high impact news on euro this morning. Fortunately, you won't find it on Forex Factory. All right, so sometimes it's beneficial to also look at, other calendars. That will help you a whole lot. That will help you a lot. So with what I have said, if this news on the euro drops, then I should expect the euro dollar to depreciate as expected. So if I go back to my technical analysis, I'm going back to my charts. So with that news on the euro, which is not listed or is not shown in Forex Factory, then I should expect Euro USD to come back to this range. To look at the range. So I'm expecting that news should bring Euro USD back to this range. Now, if Euro USD stays within that range until CPI, then buy CPI. Euro USD should be within that range. Stays there, time of CPI, then buy Euro USD. And if the pound USD comes back down, like I mentioned before, or like I said earlier, pound USD, look at, so you can see pound USD. You can see how it has cutting down to that region I drew. And you see how it has kind of retraced. So if you look closely, you will see the rejection at that region. We have rejected at this point. Now, what I want to see is, I want to see pound USD stay around this area until CPI. If it stays around this area until CPI, then I will buy. So you can see that pound USD is already rejected. Remember, this line was drawn before it even came. So I'm expecting this to stay within this area. And then if this happens, then for CPI, I will buy pound USD. Yeah. Okay, someone is asking me which site. The name of the site is my FS book. So I'll write it and drop it so that you can also go there. So look at their calendar. Don't always, so if you want to play the news and you're looking at only Forex Factory, then you are doing yourself a very great disfavor. The name of the website is FS book. Right, so questions. Only look at one USD and ask questions. Armstrong saying, I love your style. Thank you for the feedback. Hello, please. Sorry about that. My network is terrible over here. Went off and struggling to bring it back online. But we are almost rounding up. Our time is almost. So let me quickly take your questions, please. Sorry for the network is terrible. So someone was asking, I don't know if Mr. Felix is still online. He asked a question, how can I trade the news? How can I trade news being in the market before the news comes out? So, okay, so you can do that from the analysis I have given you. So from these analyses do not require you to wait till the time of the news. You can actually enter the market before it comes out with this analysis. Quickly, let's look at one more pair before we call it a day. So someone is suggesting USD CHF. USD CHF. If you look at USD CHF, this is H1 for USD CHF. So on USD CHF, I'm anticipating a continuation to the downside. Now note that on right. So this so USD CHF, I'm expecting that the market should continue its move downside. So you notice that we had this move first of all downside, then we had a retracement to the upside. So for this month of July, now if I draw my feed, now I'm a fan of Fibonacci. If I draw my feed from the beginning of this month all the way down to current price action of this month, now you will notice that from the beginning of this month, from the first day of this month to the last day, that is to the low that we experience, or this particular low down here. We look at this low down here. So I just draw my feed from the start of this month, is the high price of this month, to the lowest price recorded this month. Now there have been a retracement. You can see the retracement to around our 61.8 region. So today I will be expecting that a continuation to the downside. So what I'm saying is from here on USD CHF, I will be selling. So I expect CPI to push USD CHF downside, continuation down. USD CHF is a very good instrument to be selling for this. For this. So if you drop down to a lower time frame, you can see that on a lower time frame, structurally speaking, it has given us the pattern that suggests that we should continue lower. What do I mean by that? You can see this head and shoulder. If I so you can see the head and shoulder pattern that has formed. So this is our, you can see this point and this point and also this point. We've also experienced a break in stock. So this low here needs to be broken. So what I want to see is, this is the neckline of our head and shoulder. So look closely, guys. This is the neckline of our head and shoulder. So we want to see the market break below the neckline, thereby giving us a shift in the structure. The upward movement is the market making higher highs. We now experience the market making the first higher low. The market has made our first higher low at this point, which means the market created a high that tends to be lower than the previous high. So we've just created a higher low, and then we've created another lower, we've created a lower high rather, and then we've created another lower high. So two lower highs has been formed already. Now what we want to see is the break of the low. We want to see the market break below the low to give us a lower low. And the market will break below this particular low or this low here to give us a lower low. So before the time of the CPI, I want to see the market come down a little. So this is what I want to see before CPI. I want to see the market do something like this and then do something like this before also. Look at what I have done. So I want to see the market fall below the low that we have identified. That is this low at the neckline of our pattern. This is head and shoulder. And this low, the market falls below it a bit. When it falls below it, don't sell, just relax. Allow it to retrace back to that level before we sell. If it doesn't do this and it stays here until CPI, what I mean until CPI, 10 minutes to CPI or 15 minutes to CPI, you can take a sell. Few minutes to CPI, you can take a sell. If the market stays where it is, you CPI. Breaks below this neckline, allow it to retrace back to the neckline before you take your sell. So that is USD CHF. I'm responding to the question by AI says, kindly analyze USD CHF. So if you are here, Mr. A1, and the analysis is clear to you, please hit that step. All right, so I think that's all for today's analysis. We've even exceeded our time, the time allotted to us. So let me quickly take some questions and then we'll round it up. All right, so we cannot look at all the currency pairs that I had in mind. I had in mind to look at other pairs, but see, my network has been terrible. I have to switch to my colleague's network right now so I can do this. Our time is already up. We are already 13 minutes and we are supposed to end by 9. So, but let me quickly take the questions. Can we get the recording? Yes, the recording of this will be on YouTube. So if you wish to go through what we have said before the news, and go to YouTube. What happened to indices if it's bad for the dollar? Now, the dollar is bad for the dollar, then you expect the indices to rise. So the index should rise because the dollar is weak as a correlation. But this correlation is not absolute. It's not absolute. The reason is because if the dollar is weak, what it simply means is that money is leaving the US economy. That is, money is being, if the index or the indices are stocks. So the indices are stocks. In the year of US 100, for instance, US 100 is a collection of 100 different stocks. So what do people use in buying stocks? They use money to buy stocks. So if you want to buy any stocks in the United States, what will you use in buying that stock? It's the United States dollar. So if the dollar is depreciating, it means that people are removing money from the banks and buying stocks. And if money is pulled out from banks to buy stocks, then the dollar will depreciate because it means that they are selling the dollar to buy stocks. So the correlation is that whenever the dollar is weak, there's a tendency for the indices to appreciate value. So anytime you notice weakness in the dollar, expect stocks appreciate because money is being moved by stocks. So I hope that is clear. What happens to indices? So I've answered that. Why is very clear? Thank you. So this I've answered your question, and fine. What happens to indices? Armstrong, I have answered your question, and you're repeating the question several times. Why didn't you? All right. So please, guys, thank you so much for your time. Someone is requesting for my phone number. So I'll drop my phone number so that if you have any, you can chat me up. So that number, please don't call the number. Don't call that number. Send me a WhatsApp message. Send me WhatsApp. If you have any issues that you need me to help you, send me a message on WhatsApp. Don't call. Just send a message. Something you want to help you. Send a message. Send a screenshot. And I'll answer your question. Let me send in my number. So my name is. I'm going to send you my number.